Welcome back to Income Trading 101. Today we're going to take a look at the S&P 500 ETF Trust, otherwise known as the Spiders. And this is one of the ways that I can just sort of give an analysis of the overall market. And this video is being made at the end of the trading day on February 12th, 2021. And I'm going to go ahead once again and get rid of this volume data. You guys have heard me talk about that before. One of the things that's interesting is that this ETF for the longest time did not pass on dividends. So think about the implications of that, right? You have a basket of stocks, or at least an instrument that's supposed to replicate a basket of stocks, but many of these stocks actually pay a dividend. That means that the old index, when it gets down to it, didn't fully replicate owning that basket of stock, right? So there was additional benefit to actually owning the shares. So I remember I was a trader at the CBOE when the S&P 500 first when they first started issuing dividends. At least as I recall it. I may be off on that, but but anyway, you've got all these dividends, and it's a fairly significant dividend. I mean, back here, you're looking at each dividend. No, well, that didn't give it to me. Let's see, a dividend of $1.34. So $1.34 times 4, right, is going to be, she figure it's a quarterly dividend. That's $5.36. So I guess it's not really significant given the price of this ETF at this point. But still, better than a sharp stick in the eye, as an old boss of mine used to say. And what's really interesting is even as you look at this, so I've pulled the data all the way back to, essentially Q2 of 2010. This is just straight out an upward trend. Even with some of the various glitches that have happened, little pullbacks, this market just continues to ride higher and higher. I just got off the phone with someone asking about a stock. They had a stock that they owned that returned them over 100% return last year, and they're wondering if they should exit. And I'm like, you like this market continues to go higher, so why would you exit, right? And I'm kind of looking at that when it comes to this index as well. Is if you actually own shares of the index, I mean, it's treated you pretty nicely. So let's go ahead and shrink our time frame, go back to the 1 year point. So we're going to stretch this out to essentially February of 2020. And of course, we know what the market did, but well, I'll get to that in a minute. I'm gonna get rid of that first drop, and we're just gonna go ahead and take a look at the moving averages. Moving averages, you guys have heard me say it before, are just a really quick and easy way to get a visual idea of what this market in particular is doing. And for my short term, I like to use a 10-period moving average. In this scenario, since we're looking at day charts, it's going to be a 10-day. My medium is going to be a 20 period or a 20-day. I like to put the 10 in green and the 20 in red. And then I'm going to throw in a 60-day, which is a quarterly look at the average price. So every 3 months. So here we go. We've seen this before, this sort of scenario where you have the green, the 10-day higher than the 20, which is well above the 60. And it pretty much stays that way. You do have a period back here in September where the actual price chart dropped below and stayed below both moving averages. That also happened here in June last summer. That probably would have shaken me out of the market, but I would have looked to re-enter once we had clear price charts, price bars staying above the averages. And we're still in that same scenario today where we're seeing higher highs. And I mean, this is an all-time high for the market. So do you buy higher highs? Do you sell higher highs? It really depends on your outlook, but I'm not a fan of losing money. So I can think of a number of reasons why we shouldn't be at all-time highs, and yet here we are. So I wouldn't sell this market at all. I would be looking to buy it. If I were going to put a short position on this market, it would certainly be using an instrument with limited or relatively controlled risk, like options, not futures, but options themselves. So, anyway, that's it for the no surprises there. I'm sure for the 1 day charts for any of you guys that are trading the market. Let's look at the hourly. So the hourly gives us a little bit more action, a little bit more volatility, where you can see the moving averages really kind of interplay and possibly be more, a bit more, in all honesty, a bit more valuable when it comes to the trade. So still, with this up move today as well, I would still be leaning towards continuing to buy. As long as this market is making new highs, it makes no sense to get shorted, at least not in an instrument that's going to be a one-to-one manner. Let's see, I moved it to the 30-minute chart. I actually meant 15. So here's the 15-minute. And wow, it's funny, the 15 was still relatively bullish. I mean, that's a nice, all of these have been just nice trends up. You do have this one period on February the 10th where the stock went lower, and then it went ahead and pulled up again. So a little lower again and pulled on up to where it is now, all-time highs today. And that just blows my mind. I think if you've watched more than one of my videos, you probably know that I also like to take some fundamental views of the market, and I could write a whole dissertation on why this market should be heading lower and when I expect it to head lower. But for today, all you really need to know is that there's no way I would short this market. I wouldn't short it at all. Not at this point. I'm going to kick it back out to the 1 day. We're going to get rid of our moving averages, and we're going to toss in the MACD, the moving average convergence divergence, analysis, because I like the way, there we go. For a second, it wasn't kicking in. I like the way this tends to give me an idea of what's overbought and oversold. Of course, the only time we've dropped below the zero line recently you had a couple of smaller points back here in September, again in October, but by and large, since April, since the turnaround in March and April with the pandemic, since then, this market has largely remained above the zero line, which would put it in the overbought, in the oversold capacity or area, not anything else. So because of that, I don't really see a lot of value in this indicator right now. What I would be looking for is for it to cross above the zero line and head lower, kind of like what it did back in September. I would be looking for something like that to happen big time, to see it actually go below the zero line and track that. So that would be to me a strong indication that this market's going to head lower. But I don't see that happening anytime soon. Let's just drop it down to the 1 hour, because that might give us, sometimes it gives us more information, but it really didn't help at all. And that happens too. Let's pull this out a little bit. There you go. That's one of the things I like about this charting software trading view, is I can really manipulate all the various aspects of this chart, whether it's color or timing or the proximity of the next price. So it's really, really quite useful. So in the 1 hour standpoint, you are seeing a lot more volatility. You're seeing a lot more oscillation. Oscillation is really used as a momentum indicator. And so as we're seeing this, if the stock is in an over bought an overbought scenario, which means it's above the zero line, and it crosses, I'm expecting a downward move in price. So right now we have crossed and moved downward, but we also have a little bit of a cross happening right now, still above the zero line, like it's going to go higher. So you definitely just have to toy around with this, try it in different time frames, and see if this sort of indicator is something that would be of value for your trading style. It's not going to be for everyone, but I certainly like it a lot. All right, let's move on to the Fibonacci analysis. You might say, Fibonacci analysis of what? This has been a one directional move, right? And by and large, even though it has, I'd like to just get a sense of how much above the end of last year. So I'm going to start it here. How much above the end of last year we actually are. So we're going to do a Fibonacci retracement, and we're going to take it from the end of 2020 over to this low that happened. I'm sorry, beginning of 2020 over to the low of May. I'm sorry, of March. And I'm going to stretch this on out eventually. Let's see. That's still trying its best to keep me going. So here we go. There we go. Oh. There we go. Finally. I want to stretch this over just to get a better sense. So right now we are trading above. Get that. I mean, so the Fibonacci numbers are all there. We are showing a 100%, return and then some, but we actually have gone above the 61.8% above number. I'm trying to look. Next up, we would look for the 2.61. So this is quite a lot. It'd be interesting to see if the S&P 500 would go so high as $4,700. Or $470. I don't see that happening anytime soon, but it's just good to see. It's good to see what's possible relative to where we've been, and just to be aware of it. Even though we're at all-time highs, the question still remains: how high can we go? So that's it. Let's also, before I go, do one of the things that I love, which is draw some trending lines. And that's going to be really easy, some channels, because this market has been so, this has been a technical analysis dream in many ways. Now, I did allow for this down here, the low that we got back in October. I allowed that to be outside of our channel, because I really do think that was an exception. Whereas you do see multiple other areas where the channel touched and bounced. And we also see that in the top of the channel, we had two recoveries, or two lower trends started on the channel. So that's it. I just don't see this. I don't see it changing anytime soon. Man. There we go. I don't see this changing. I do see us going higher. We've got the upper end right now of that channel at 418, which would represent 4,187 in the S&P 500. That'd be huge, 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 especially given that right now we're at 393. So do I think this market is going higher? Yes. Do I think it's going to go lower? Probably. If I had to bet money which way, it'd probably be going up versus going down. But that being said, you really have to do your own analysis and, take a look at other indicators. I certainly use more than the 3 or 4 that I use on these videos. But all I really need is 2 or 3 to agree with one another for me to take a closer look and probably decide if I'm going to use stock or if I'm going to use options to be able to, make a profitable gain using either one based on my decisions. So That's it. Thank you so much for watching. Thank you for subscribing to this channel as well. I've gotten so many subscribers later. It's been unbelievable. And if you guys have any questions, feel free to reach out to me. Of course, we have incometrading101.com as well. And that's it. Have a wonderful weekend and happy trading. Bye-bye.